This is the second of our fiscal year 2026 budget hearings for agencies under the jurisdiction of the Subcommittee on Financial Services and General Government. Today, we welcome the Chairman of the Securities Exchange Commission, my good friend Paul Atkins. Paul, thank you for being here. I'd also like to extend a warm welcome to the other senators that have joined us here today. I don't know how well attended your hearing will be today, Paul, but we're going to have a little bit of motion in and out, but please know that's no lack of interest in. It's just the voting schedule that we've got here. But I look forward to working with all of my colleagues here in a bipartisan manner to advance the ball. You know, access to deep, liquid markets is a pillar of American economic strength. It supports innovation, job creation, and prosperity. And regulators like the SEC play a vital role in preserving market integrity, but they must do so without stifling innovation or unduly burdening investors with excessive compliance costs. Chairman Atkins, today, the SEC is requesting approximately $2.2 billion in appropriated funding for 2026. This funding supports the SEC's single appropriations account, salaries, and expenses, which has remained relatively flat since 2023. While enforcement is a necessary tool, it must be used responsibly. Too often, past chairmen have aggressively pursued unrelated social or political goals, such as climate change or diversity, that have really little bearing on the fiduciary duty of corporate officers. I'm confident that under your leadership, the SEC will refocus on its core mission, that is protecting investors, maintaining fair and orderly markets, and importantly, facilitating capital formation here in America. This hearing also provides an opportunity to clarify the SEC's funding structure. While the agency is funded through appropriations, these amounts are paid for by transaction fees that the SEC collects pursuant to Section 31 of the Exchange Act. Over the last decade, the SEC has collected approximately $20 billion in such fees. These costs are ultimately borne by investors and market participants, and as such, are simply another form of taxation. As Congress considers future funding levels, we must weigh the benefits of prudent regulations against the economic burden that's imposed on the American public. Every dollar Congress takes from investors to operate the SEC is a dollar not invested in a new product or not returned to retirees in the form of pension income. Critically, I want to explore the SEC's evolving role in digital assets. Under the previous administration, the Commission imposed a regime of regulation by enforcement, and frankly, that chilled U.S. innovation and drove it overseas. Chairman Atkins, I commend your leadership in providing regulatory clarity for digital assets, and I look forward to working together with you as matters proceed. Congress today and in days to come, I hope, will be advancing my stablecoin legislation. We're undertaking careful consideration and much-needed action on digital asset market structure soon to come. As a steward of taxpayer dollars and as the vanguard of maintaining market integrity, it's incumbent upon the SEC to ensure that the regulatory environment supports growth, investment, and financial resilience. I want to thank you again, Chairman Atkins, for testifying today. I look forward to discussing your approaches to these objectives and my questions. I now want to turn to my colleague, the ranking member, Senator Reid, for his opening statement.
Thank you very much, Mr. Chairman, and welcome, Chairman Atkins. It was a pleasure sitting down with you yesterday and discussing. Thank you so much. And I look forward to hearing about the SEC's fiscal year 2026 budget request, which we received Friday afternoon. Since the Great Depression, the SEC has worked to make the financial markets more transparent, fair, and efficient for investors. It has also worked to promote capital formation so that businesses can grow and contribute to our nation's economic success. The SEC meets its mandate by making sure that public companies are truthful and honest in their disclosures, by making sure that investors are not defrauded by their stockbroker or their financial advisor, and by making sure that when fraud does happen, investors get their money back. Unfortunately, the Trump administration has placed, in my view, at risk the SEC's ability to do all of these things. In some ways, this harkens back to the 2000s when an underfunded SEC, eager to please industry, utterly failed to detect and address the Enron debacle, Bernie Madoff's fraud, and ultimately the Wall Street collapse and the Great Recession. Today, our financial markets are even more complex than ever, and the Trump administration's chaotic economic policies have roiled the markets for investors. The resulting volatility opens up fresh avenues for insider trading and for market manipulation, and it creates a perception among the American people that the market is rigged. Throughout the government, there appears to be special rules for those with close political and financial ties to the president. As an independent agency, the SEC should be acting independently. However, it has dismissed pending cases against individuals and companies that do business with the president and have been major political donors. And I'd like to hear the rationale for these dismissals. It's important, I think, to establish, again, to reaffirm the independence and the integrity of the SEC. While holding vast amounts of market-moving information, the SEC, as we discussed yesterday, has invited Doge inside the building. It has done so at the same time there's been an open case involving Doge's erstwhile chief, Elon Musk. In view of the potential conflict of interest, I'd like to hear what vetting the Doge representatives received, what information they can access, what restrictions are placed on their activities, what conflicts they may have, and what influence they have over commission and staff actions. Finally, the SEC appears willing to approve new financial products that could have significant risks for investors in the broader economy. For example, the SEC has just approved new products that package opaque, illiquid, and complex loans into securities that are supposed to be highly liquid and safe enough for retail investors. I'd like to hear how investors will be able to get their money out when the loans backing these products perhaps go south. In this environment, the SEC should be building its strength and expertise, but over 4 months, it appears to be disarming itself. The agency has cut its headcount by at least 15%, including some of its most experienced employees. I'd like to get your impressions of what this rapid brain drain, is impacting the SEC. And again, the bottom line here is, does the budget request provide the sufficient resources the SEC needs to carry out its critical responsibilities? Again, thank you, and I look forward to the testimony.
Chairman Atkins.
Oh, well, thank you, Chairman Haggerty and Ranking Member Reed and members of the subcommittee. Thank you for inviting me to testify today. This testimony reflects my individual views as chairman of the commission and does not necessarily reflect the views of the commission or my fellow commissioners. I'm grateful for the opportunity to discuss the SEC, including our important mission on behalf of our fellow citizens, investors, and taxpayers, and to speak to some of my priorities as chairman. First and foremost, it is a new day at the SEC. I am determined that we return to our core mission that Congress set out for us more than 90 years ago. The SEC's three-part mission was enunciated by Congress in the Exchange Act. And that's first, investor protection, which is vital to our mission, holding accountable those who lie, cheat, and steal. Second, capital formation is at the root of what we do, fostering a direct economical route for investors' capital to find its way to entrepreneurs and industry to create products and services that the market needs. And the third core part of our mission is maintaining fair, orderly, and efficient markets. Congress calls on the Commission to ensure that our regulations balance costs and benefits, that they do not become too burdensome by adding needless friction to the marketplace, undermining the capital formation that yields so much benefit. On the 30th of May, I submitted to Congress the agency's fiscal year 2026 budget request. I'm pleased to support President Trump's request of $2.149 billion for the SEC operations. This request reflects the focus on returning to the core mission that Congress set for the agency, as well as resource needs for the crypto task force. This budget level is flat as compared to both fiscal year 25 and 24 enacted funding levels. My time in public service in the private sector has allowed me to see firsthand how regulations affect markets and investors. They can stoke innovation, facilitate investment goals, and create opportunities or burdens on businesses' ability to compete and serve their customers. How we implement regulations at the SEC is crucial. It's one thing to write a regulation, quite another for it to achieve its intended goal. Regulations should be smart, effective, and appropriately tailored within the confines of our statutory authority. A key priority of my chairmanship will be to develop a rational regulatory framework for crypto assets and the crypto markets that establishes clear rules of the road for the issuance, custody, and trading of crypto assets while continuing to discourage bad actors from violating the law. Clear rules of the road are necessary for investor protection against fraud. Policymaking will be done through notice and comment rulemaking, not through regulation by enforcement. The Commission will utilize its existing authorities to set fit-for-purpose standards for market participants. The Commission's enforcement approach will return to Congress's original intent, which is to police the violations of these established obligations, particularly as they relate to fraud and manipulation. The SEC is returning rulemaking to regular order. Our comment periods will not be artificially short, and the public will have ample time to provide feedback. The SEC will also be sure to take into consideration how rules overlap and how regulatory burdens build, in keeping with our obligation to consider their costs and benefits. There will be targeted, common sense reorganizations to come at the SEC. To start, I'm seeking approval from Congress to disband what is known as FinHub. Innovation should be ingrained into the culture of the SEC-wide and not limited to a relatively small office. We've begun a process to review our technology infrastructure and our contractual obligations in that regard. And so to close, we will work with our colleagues in the administration, especially other financial services regulators, and with you all here in Congress to bolster the economy and build on U.S. leadership of global markets. This SEC will make every effort to ensure that the U.S. is the best and most secure place in the world to invest and to do business. So thank you all very much.
Well, thank you for your Thank you for your testimony, Mr. Chairman. Before we turn to questions, I'm going to recess this committee for about 10 minutes so we can go to the Senate floor and vote. When we return, we'll resume with questions for our witness. Thank you. Chairman Atkins, under the previous administration, the SEC engaged in a regulation by enforcement approach. That chilled U.S. innovation in digital assets. It took away our leadership position in the digital assets arena and, frankly, drove digital asset innovation overseas. Now, thanks to your leadership and that of Acting Chairman Ueda, the SEC has taken important steps toward providing regulatory clarity for digital assets. Likewise, Congress is taking action right now by advancing my stablecoin bill, the Genius Act. And by undertaking that legislation, we're going to open the door to undertake even further legislation on market structure. Chairman Atkins, if you could just take a moment and explain why swiftly providing rules for the road for digital assets is important to America.
Well, thank you, Chairman. Yes, it's I think vitally important because innovation cannot occur in a vacuum. Innovation and new products, depend on certainty, and the more certain the rules of the road are, the better then people can go and get legal opinions in order to do things and make investments so that they're sure of what they're investing in and that the rules won't change down the road. So, unfortunately, because we have for now, almost a decade, lack of certainty in this area, I think that has chilled the investment climate, at least in the digital asset space in the United States.
Yeah, I certainly agree, and I sadly have seen innovators leaving America telling me they're going to start their next business in another country, this type of thing, simply because they lack the clarity that you're describing. So I think it's much needed. I'd like to turn our conversation now, though, to another area that I think is something that has an issue here in America that's gone on far too long. And that has to do with the dominant proxy advisory firms. That's ISS and Glass Lewis, to be specific. And they've been able to operate here in the United States with very little regulatory oversight. The firms have exploited their duopoly, and they've used it as a means to basically hijack corporate governance. And what they're doing is they're pushing costly and destructive partisan agendas through as they provide their recommendations. Think about it. U.S. public companies and their retail investors pay the price as shareholder returns take the back seat to, quote, woke partisan agendas. These agendas are advocated by these so-called proxy advisors and the recommendations that they put forward for their clients. The firm's perverse influence on capital markets is only made more concerning by the fact that they're both foreign-owned. ISS is 80% owned by a German entity that openly claims to, quote, allocate capital to sustainable initiatives, while Glass Lewis is owned by a Canadian private equity firm which has stated that ESG remains a, quote, key factor in investment decision-making. Chairman Clayton attempted to address the problem by amending the proxy rule's definition of solicitation to include proxy voting advice. His rulemaking imposed a baseline level of transparency and accountability on these firms. However, Chairman Gensler arbitrarily and capriciously reversed key parts of Clayton's 2020 rule. This allowed ISS and Glass Lewis to continue their shakedown of American companies. Chairman Atkins, broadly speaking, do you have concerns about the activities of these proxy advisory firms? And I'm curious what measures the SEC might have taken thus far to address those concerns.
Well, thank you, Mr. Chairman. Yeah, I do have concerns about gamesmanship and abuse of the corporate governance process and the back and forth that's gone on over the last few years. So I want to be sure that we are able to address that and look into it, and that's going to be part of our program going forward.
Good. I'm glad to hear it's a priority. ISS previously sued the SEC over Clayton's 2020 rulemaking. Under Gensler, the Commission dropped its defense of that rule. If the SEC were to resume its defense of the rule and do so successfully, the reasonable regulatory requirements imposed under Chairman Clayton would be restored. I urge the Commission to consider defending Clayton's rule and to explore every possible avenue to rein in the proxy advisors and shield the competitiveness of our U.S. capital markets. Now I'd like to turn to CSDDD, another favorite. The European Union has adopted the Corporate Sustainability Due Diligence Directive, also known as CSDDD, to impose extraterritorial regulation on U.S. companies, motivated by ESG and other progressive policy goals, and arguably a desire to use regulators to kneecap more successful jurisdictions like ours. The rule imposes significant compliance burdens that will hamstring U.S. competitiveness. The EU's economic growth is evaporating thanks to the massively increased regulatory burdens that it has imposed on itself. But rather than reform its own failed regulatory state, the EU would prefer to undermine our economy by imposing growth-killing rules on U.S. businesses. Beyond its massive compliance costs, the CSDDD is an affront to U.S. sovereignty. Major policies impacting our businesses ought to be debated and decided by U.S. lawmakers, not faceless bureaucrats in foreign capitals. In recent weeks, even President Macron and Chancellor Merz have acknowledged that this extraterritorial regulation should be repealed. Chairman Atkins, I'd just like to know whether you're concerned about the extraterritorial regulation that's going on, and if so, if you could describe the harmful effects that will have on U.S. companies that are ensnared by the EU's rule.
Well, thanks, Chairman. Yes, I do. I am very concerned about the extraterritorial effect of these rules, and particularly to small businesses in the supply chain, vendor chain, to multinational companies, because by the terms of some of these directives, some of these requirements, especially third-party rights of litigation and action, is very threatening to manufacturers and other suppliers here in the United States. So I will definitely take steps with our counterparts abroad to make them understand how concerned we are, and to push back on those effects on the United States companies.
I appreciate you making that a priority. On the executive branch side, I think you can make a great deal of progress. On the legislative branch side, I've introduced the PROTECT Act, which is reciprocal, and it would push back on this sort of extraterritorial jurisdiction as well. So thank you for making that a priority. I'll turn now to Ranking Member Reed.
Well, thank you very much, Mr. Chairman, and thank you, Chairman Atkins. As we've proceeded, there have been a significant number of cases, well, several at least, that have been dismissed by the SEC, and the individuals have associations with the president or his family. And it raises the question, the public, is there some connection between their political connections and their legal standing? The most probably notable of these is Mr. Justin Sun, who was sued by the SEC for fraud. Mr. Sun is the biggest investors in Trump's meme coin, funneling at least $40 million to the Trump family. He invested $75 million in Trump's other crypto project called World Liberty Financial. He's affiliated with crypto exchange HTX, which was the first to list Trump's stablecoin, USD1. He created the Tron blockchain, and according to a crypto research firm, the overwhelming majority of Hamas cryptocurrency seized by Israeli authorities has been Tether on the Tron network. In addition, Mr. Sun was reportedly under investigation by the Department of Justice for financial crimes, and yet his case was dropped. What was the rationale for dropping the case against Mr. Sun?
Thank you, Senator. So that I believe that case was dropped before I got to the SEC, or if not, I didn't participate in it. So I can't speak to the specifics of that case. As far as a lot of these cases that were brought by the SEC, as we are looking again at the rules and looking to bring some order to the crypto markets and the rules that govern those, we're trying to square our enforcement stance with what our stance is with respect to those assets.
Well, I think you appreciate at least the impression that is generated here. I'm doing a quick calculation. Over $100 million was given to the president directly and indirectly, and suddenly a case that was brought, I'm sure not frivolously, but with evidence, et cetera, was suddenly dropped. How would you reassure the American people that there will be no political interference in the operations of the SEC?
Well, Senator, this is now my third time at the SEC, so I've been in and around the agency for 30-some years. And so working with many chairmen and commissions over the years, I can tell you that, the commission addresses issues forthright and that without fear or favor and under both parties. And so I'm proud of the record of the SEC, and I assure you that, we will continue to do that while I'm chairman.
We had an opportunity, I guess, and again, thank you for coming by. It was a great opportunity to talk about some of these issues. One is the presence of DOGE within the SEC, and also the staffing cuts that have been initiated across the government, but also at SEC. So starting with the staffing cuts, how many staff have left the Division of Corporate Finance? Do you have those numbers?
Perhaps. What I can tell you is that overall, 15% of the staffing of the agency have left voluntarily. So they took voluntary retirement by these things. 11%. So CorpFin is a bit below the average of 15%.
Right. So again, this is the division of SEC that looks at filings for companies, IPOs, et cetera. As a loss of, I presume, since they left in retirement, these are senior personnel, probably some of the most experienced members. Can we assure the public and the corporate community that they'll still be efficient, effective, and timely review?
Well, yes, Senator. So again, I've been in and around the SEC now for 30 years. And I have to say I'm very proud of the staff. I think they're very competent, and I think there's a deep well of competency there. And so the good thing, one thing that comes of retirements is that it allows junior people who are competent to move up the ranks. So I think that circulation is good. I miss the former folks who have left, but they took that voluntarily as far as the retirement goes.
Well, my time's expired, so let me yield back to the chairman. Thank you.
Thank you, Ranking Member Reed. Now I'll turn to Senator Coons.
Thank you, Chairman Hagerty and Ranking Member Reed, and to Chair Atkins. Thank you for being here. and for your service. I appreciated finally receiving more details on the President's budget request, and I hope more broadly this is not the new normal for this administration. We need timely cooperation in order to draft our appropriations bills. I appreciate your appearance here today and the directness and clarity of your presentation. Taking a look at your proposed budget, it does include some cuts, particularly of concern to me is the Enforcement Division. And as you were just discussing with Ranking Member Reed, the number of career officials who've taken buyouts or have been pushed to retire. How many people have left the Enforcement Division over the last 6 months?
Well, so there's been nationally for enforcement 15% decrease, so it's right at the average for the agency overall. And again, you know, we have a deep well of experience, and not just here in Washington, but throughout the regions, and so we have very competent people. And as we look at you know, going forward, our request is stable as to you know, previous years, and so you know, where there are gaps, we'll fill them in, and you know, I have confidence that we'll be able to do the job that we need to do with what we have.
President Trump signed an executive order that paused all future investigations and enforcement actions under the Foreign Corrupt Practices Act for at least 9 months, if I'm not mistaken. No, for 180 days, forgive me. I recognize this applies to the DOJ, but the SEC also plays a critical role in helping implement FCPA. You're authorized to share information obtained with the DOJ if they uncover potential criminal activity. I'm troubled that the president in this action seems to be deciding which laws will be enforced and which laws will have their enforcement suspended. Is the SEC under your leadership still prioritizing enforcement of the FCPA? And has the SEC offered any evidence to the DOJ that's been rejected due to that executive order?
Well, I can't speak to any particular, you know, investigation or activity.
I understand you can't speak to any particular investigation, but you certainly can report on whether or not that executive order has resulted in the SEC stopping all investigation or enforcement of the FCPA.
Well, many of these cases involve many different aspects of the securities laws, so just that one section. Yeah, and so, so to my knowledge, you know, nothing has been directly affected, but you know, I'm happy to get back to you on that.
I'd appreciate it. Earlier, you said the core mission of the agency you now lead is to protect investors against those who would lie, cheat, or steal, which I would agree with you is in some ways the core mission. The FCPA, although some have decried it as putting American business at a competitive disadvantage, I think actually puts us at a competitive advantage because foreign governments, foreign companies know that they can count on American business to secure its business advantage around the world fair and square, not through underhanded ways or not through bribery. So I certainly would appreciate your following up with me on what you see as the enforcement trajectory for the FCPA. Last, cryptocurrency is a very pressing issue, an issue you have a lot of experience with, and I come at this topic through the lens, of course, of my home state, which has long been an established financial services and banking center. You've endorsed allowing crypto exchanges to handle both traditional securities and crypto in one entity. If exchanges like Coinbase, that are crypto exchanges, are permitted to offer their services as well as more traditional things, stocks and bonds, how do you ensure they're held to the same rigorous standards as more traditional banks and investment firms?
Well, so that's part of our task now to try to come up with regulations that make sense for the industry and that that allow for innovation. And so our task force, you know, is holding roundtables and we'll come out with a report here in the next couple months, and we'll come up with proposed rules of the road to you know and take comment you know in that regard, and then go ahead and go to you know go through with a rulemaking process.
Well, as you go through that process, I just urge you to hold to that core understanding of the role of the SEC to protect crypto investors from being harmed by fraud and market manipulation. The traditional financial services industry is subject to comprehensive regulation. And I think there's an understandable anxiety on their part about facing a direct competition from a financial sector that is lightly regulated or not at all. And while I recognize the value of innovation and of making sure that the United States remains on the cutting edge of innovation in financial services, I think that also has to be balanced with protecting investors and thus retaining the confidence that global investors have in the credibility of the American capital markets. And you have a unique role. I think your background and experience will be relevant. I very much look forward to staying in touch on this because I think this crypto task force you've put together is going to be critical. Last question, do you believe the SEC needs any new statutory authorities to regulate crypto and carry out the recommendations of the task force?
Well, thank you for that. It would be great to be undergirded by statute, but in the meantime, I think we have enough authority to under the securities laws to be able to come out with regulations in this regard. But it's always best to have that firm foundation.
Agreed. Thank you, Mr. Chairman. Thank you, Mr. Chairman.
Thank you, Senator Coons. Chairman Atkins, we're awaiting Senator Van Hollen's arrival. This gives me an opportunity to ask you another question, and that broadly addresses what I think you and I have discussed before, my viewpoint that our capital markets remain one of the greatest sources of competitive advantage for the United States of America. And in my view, staying on the cutting edge of innovation in the capital markets is going to be a critical aspect of that competitiveness. I mentioned earlier in our discussion the fact that I'm introducing stablecoin legislation, the Genius Act, to begin to move us down that road, to create rules of the road for digital currency that would essentially take the United States into a modern-day payment system. It's got many benefits, particularly among those, extending the position of the dollar as the world's reserve currency, stimulating demand for U.S. Treasuries, and providing critical protection for U.S. consumers. I would very much be interested in your thoughts as to how we look at providing the statutory underpinning that you just described, and if you had a chance to look at the stablecoin legislation that I proposed, whether that gets you moving in the right direction.
Well, thank you. I salute you for advancing that bill and having it considered by the Senate. I think that one of the primary use cases for digital assets is stablecoin, and for payments and the rapidity of the transactions that are able to be done through that. And so I think that to have a bill such as yours that would provide for those both protections and to set forth that foundation, I think is really important.
We have strong bipartisan support. I look forward to working with you and your team to advance this area. Now I'll turn to Senator Van Hollen.
Thank you, Mr. Chairman. Mr. Chairman, good to see you again. At your confirmation hearing, you and I discussed the issue of the Public Company Accounting Oversight Board, the PCAOB, which was formed, as you know, after some major companies like Enron failed after cooking their books, and none of their auditors stopped in to correct the issues, and Enron's failure alone cost its shareholders about $67 billion. So Congress created the PCAOB, in effect, to audit the auditors and make sure they stop fraud at companies they audit before we have catastrophic failures like we witnessed in the Enron case. When you and I talked about this before in the Banking and Housing Committee, you agreed that the function played by the PCAOB was essential. Is that still the case?
Yes, sir.
Yeah. Yep. So one of the reasons I raised it then was I was concerned about efforts to fold the PCAOB into the SEC because of concerns that it would lose its punch and its ability to do the job. The House Reconciliation Bill, as you know, does fold the PCAOB into the SEC. I think that it will fail under the Byrd Rule, but I want to talk for a moment about the merits of that proposal. Because my understanding from the SEC itself is that, at least as of last month, the SEC does not have the personnel with the experience conducting those in-depth examinations or inspections of registered public accounting firms. That's based on information from the Office of the Chief Accountant. Do you have any reason to think otherwise?
No, because we don't have that function, but if we get if it's folded into the SEC and we get the funding, we could take over that function using the examiners, I would imagine, from the PCAOB and not miss a beat.
Well, I want to press you a little bit on that, Mr. Chairman. How many of the 600 PCAOB employees does the SEC plan to hire to keep this important function going?
Well, we haven't done any study on that yet, so, but
But you say very easily that you could absorb them. That obviously requires additional funding, does it not?
Exactly, and but the way I understand it, that funding is contemplated by the.
Well, so it's interesting you say that because the PCAOB right now is funded by a firm, a fee on the firms it oversees, right?
Well, and also on public companies, there's basically
Right.
a wealth tax on companies.
But it's a fee-generated revenue, right?
That the SEC approves, and.
Yes,
Right.
but the reconciliation bill, Mr. Chairman, eliminates that authority. It eliminates the authority of the PCAOB. I mean, it eliminates the PCAOB, it folds it in the SEC. It does not include the authority to raise have fee-based revenue. Were you aware of that?
Yes, but what I understand is that there is contemplated, funding for that, and built into our budget, we do have, since it's an even budget from last year, when you account for people who have left voluntarily from the SEC, we have about $100 million or so that could help tide it over, I think.
Are you aware of what the current PCAOB budget is?
That's perhaps 400, I don't know.
Yeah, no, you got it.
Something
You
like
got it right. It's $400 million. You've got $100 million in your budget. That's a $300 million gap. If you want to maintain, in my view, the same functionality, which is something that I think all of us should be very interested in, not just with respect to U.S. companies, but as you and I discussed, Senator Kennedy and I passed legislation to make sure that companies based in China that are publicly listed on U.S. exchanges are subject to this audit procedure. I assume you think that's a good thing, that they're subject to that.
Well, I think the functions of PCAOB are vital, as we spoke of before, and, should that be folded into us, we'll be back to you all to, for the proper resources to carry it forward, so we won't miss a beat on that.
I'm just saying, Mr. Chairman, it's pretty clear that the resources are not there in this budget if it gets folded in. I mean, as you pointed out, you've got $100 million extras. We're both pointing out the current budget is $400 million. So unless you really think you can fire or get rid of a lot of people and still do the job, we have an issue here. But I'm in my view, when something is not broken, we shouldn't try to come up with a different fix. If there are reforms to the PCAOB that you recommend, maybe that would be a better route to take if we want to make sure that they continue to have the capacity to oversee companies in China and elsewhere. I would also just point out in closing, Mr. Chairman, that a number of other countries have raised concerns about this contemplated change in the House because their agreements, their audit agreements are with the PCAOB, and they point out that it is not a U.S. government entity, right? It's a separate independent entity. And as soon as that role is taken over by a more of a government entity, all those agreements will need to be renegotiated if they're willing to renegotiate them. So thank you, Mr. Chairman. I hope we can continue to pursue this issue because I think that what the House did is essentially breaking a system that is actually working quite well right now.
Thank you for raising that, Senator Van Hollen. And Chair Atkins, I want to thank you for your testimony today. The record will remain open for 1 week, and members will be able to submit questions for the record during that time until June the 10th. Now, this meeting is adjourned.